Right, let's move on to the investment in Timon Limited. You will remember that we have identified that this is a subsidiary and there's a change in control to a normal IFRS 9 investment. Therefore, we will have to take out our subsidiary and we need to include the IFRS 9 investment. Right, but what do you need to remember? You need to remember that there will be group profit or loss on this transaction, which will be included in our profit or loss that we need to take out. Now, why do we take this out? Remember, in terms of IAS 7, we need to disclose on the face of our cash flow statement any proceeds from selling a subsidiary. Therefore, we will have to disclose this amount on the face. Therefore, guys, if this amount is still included in our profit or loss, this will be double counting or double presenting. Right, now let's have a look at the details provided. They've indicated to us that Timon Limited is responsible for the production phase. Originally, they've purchased 70% controlling interest on 1 April 2017 for a cash consideration of 450,000. The total equity at that date, 642,857. Now, guys, let's just talk about the profit or loss in terms of our separate records. Remember, when there's a loss of control, there's a few things that we need to identify. There will be profit or loss in the separate records of our parent. There will be profit or loss in our group records. And we will have to identify if there is a day one gain or loss recognized in our parents' records. When you look at this, when we prepare our group statements, we reverse, we take out the profit or loss in terms of the separate records. We take out the day one gain or loss in terms of the separate records. Therefore, in terms of our group records, they have already performed the above. And we only have to focus on calculating the group profit or loss. Right, now let's have a look at this. They indicate to us on 31 December 2018, Bisney Enterprises sold 90,000 of its shares in Timon Limited to outside shareholders for a cash consideration of 335,300. Bisney Enterprises lost control over Timon Limited due to the sale, and the remaining 10% interest had a fair value of 88,000 Rand at 31 December 2018. Right. Now, I have already listed our steps on the left side of your screen for us to be able to calculate our group profit or loss. Calculation 18, we need to de-recognize our net asset value, de-recognize our goodwill, they've indicated to us that this is 0, de-recognize our NCI, recognize the consideration received, and recognize the remaining 10% at fair value. Now, I'm able to remember that this remaining 10% will be 88,000, and they've indicated to us that the consideration is an amount of 335,300. Now, guys, as I identify this 88,000, immediately I will transfer this to my T account. Calculation 6, investment in equity instruments, and I need to include this at 88,000 in terms of my 10% in Timon. Okay, right. Now, when I look at my calculation, I've transferred the 88,000. I now need to de-recognize my net asset value. We need to refer to the scenario, and from the information provided, we need to calculate our net asset value. Okay, so guys, how do we calculate net asset value? Remember that your assets minus liability equals equity. Therefore, you have two options. You can either add the 150,000 and the 410,000, and this will be an amount of 560,000, or you can add inventory, cash, and trade and other receivables, and this will be 560,000. Therefore, our net asset value will be an amount of 560,000. But guys, remember, you can't assume that your marker knows this. You need to indicate how did you calculate this. Therefore, I need to indicate to my marker that this is 150,000 plus the 410,000. right? Any goodwill? No. We need to derecognize our NCI, and this will be the 560,000 times 30%, and this will be an amount of 168,000. Now guys, if we derecognize our net asset value from a group perspective, you need to include your brackets. If we derecognize our NCI, remember your NCI will decrease on the debit side, right? Assets decrease on the credit side. Therefore, this will be a positive as we derecognize the 70% owned in this subsidiary that we take out. Therefore, our group profit will be an amount of 31300. Now, immediately, guys, we need to take this out in calculation number 2. Therefore, when you refer to our calculation number 2, you will remember that this is our cash paid, and we need to take out our profit. Therefore, this is our group profit in terms of Timon. Remember, if we need to take this out, we need to include our brackets, 31300, and this is calculation 18. Important to indicate to your marker. Then, very important as well, we have to derecognize the NCI. This movement in terms of our NCI, we need to take out. Our NCI decrease on the debit side, therefore take out, and this is the NCI in terms of Timon. Calculation 18 for your marker to follow, and this is 168,000. Right, now when we look at our calculation, we have already recognized the 88,000. We've taken out our NCI. We still have to take out our net assets. Therefore, when we refer to our scenario provided, we need to take out the inventory and we need to take out our trade and other receivables. Remember, we have identified that this was a subsidiary. This is now a normal IFRS 9 investment. Therefore, we need to take out the subsidiary. We need to include the IFRS 9 investment, the 88,000, which we have already done. Therefore, let's take out the inventory and take out our trade and other receivables. Inventory, if we take out the inventory, remember, this is the subsidiary sold, and this is Timon. If we take this out, our inventory decrease on the credit side. Therefore, this will be a credit of 200,000 Rand. If we take out our trade and other receivables, decrease in terms of the subsidiary, this is Timon, and we need to take out 271,500, a decrease. Right, now guys, when we look at this, what do we do with this 88,500? Remember, in terms of our cash flow statement, this is cash that was included in our group. We have now sold this. Therefore, we need to deduct this amount, this 88,500. We need to deduct from the consideration received. Therefore, on the face of your cash flow statement, in your cash flows from investing activities, we need to include proceeds from disposal of subsidiary. Now, you will remember when we refer to our calculation, that in our calculation, we have identified that there is 335,300. This is our consideration. And our bank account included 88,500. Therefore, they received the 335,300, but we now need to take out the 88,500 because we will no longer be able to consolidate this within our group. Therefore, a total consideration received to the value of 246,800. Remember, a positive, this is received. Right, now guys, when we look at our calculation, we have recognized or actually derecognized our net assets, we have derecognized our NCI, and we have recognized our consideration on the face of our cash flow statement. We are now able to refer back to our scenario and we can tick off Timon Limited. We have transferred all of the relevant details. Right, let's have a look at the investment in Nala. Bisney Enterprises acquired 85%, and remember, then they have sold 20%. They have a remaining 65%. Now, we have identified that this is a subsidiary that remains a subsidiary, and we need to apply IFRS 10 paragraph 9.6. Right, now, when we recap 9.6, you will remember that paragraph 96 indicates to us that the difference between one, the movement in your NCI, therefore, what was the NCI before the change and what is the NCI now? Therefore, before and after, and two, the consideration. This difference will be your change in ownership amount. Now, they indicate to us, when we look at this, on 30 April 2018, Bisney Enterprises sold a 20% interest in Nala Limited at a profit of 255,000, and this is included in the change in ownership reserve. Now, when you look at the change in ownership reserve in our statement of changes in equity, you will identify that this is on the credit side. Therefore, this is a credit. Now, when you look at paragraph 96, we need to determine what is our NCI, or what was the NCI before the change, therefore, when we had 15%. Remember, they acquired 85%, therefore our NCI had 15%. And what is our NCI now when they have 35%? When you look at this, guys, 65%, therefore our NCI will have 35%. But what is important to remember, on the face of your cash flow statement, we need to indicate the change in ownership, the proceeds, in terms of the partial disposal. Therefore, we need to determine what is the consideration, which we do not have at this point of time. But we are able to reconcile this. Right, guys, now how do we do this? Calculation 19. I have included paragraph 96 on the right side for ease of reference. When you look at this calculation, remember our timeline, and as always, I prefer to make use of a timeline to explain to you. The change occurred on 30 April 2018. Therefore, 4 months, 15%, and 8 months, 35%. I'm right, 35%. Now, to be able to determine our NCI's value, when you look at the information provided, they provide us with the net asset value on 31 December 2017 to the value of 1,040,000. Therefore, we have our net asset value. We are able to determine what is the retained earnings, the profit portion for 2018 by calculating our movement. And then very, very important to identify that there is a dividend declared of 85,000 on 31 March 2018. Therefore, this is before, and we will have to add this back. Okay, so when we look at this is our timeline. We have a net asset value of 1,040,000. We need to calculate the profit for the 4 months. How do we do this? Okay, so guys, for those of you that don't understand, why do we add back our dividends? Please look at the screen now. For those of you that do understand, please forward a little bit. Right, now when you think about your statement of changes in equity, you will have your retained earnings, you will have an opening balance, and you will have a closing balance. Now your opening balance will be your prior year's closing balance. Therefore, the movements will be your profit or loss for the year and your dividends. And then we will have our closing balance. Therefore, if we need to determine and reconcile this profit or loss figure, we will have to add back our dividends. Remember, dividends will be deducted. Therefore, in a scenario, you will receive the opening balance and the closing balance. You will receive dividends, but you need to add this back to be able to determine what is your profit or loss if you reconcile this account. Therefore, when we now look at this, we know that our retained earnings, the opening balance is 765,000, and our closing balance is an amount of 845,000. Now, for us to be able to determine the total profit for the year, we will have to use the 845,000 minus the 765,000, and this will be an amount of 80,000. We need to add back the dividends, the 85,000, and this will be 165,000. But this is for 12 months. We need to determine for 4 months, therefore times 4 over 12, and this will be an amount of 55,000. Therefore, we are able to add this 55,000 to our net asset value plus 55,000. But what do we need to remember now, guys? Now we need to deduct our dividend, the 85,000. Only now do we deduct the dividend. Therefore, our total net asset value is 1,010,000. Now we need to determine what is the NCI's value before the change. Therefore, 15%. Before the change will be the 1,010,000 times 15%. And this is a value of 151,500. Then, what is the NCI's value after the change? At 35%. Exactly similar, guys. 1,010,000 times 35%. And there is an increase in our NCI of 3,535,000. Therefore, our NCI will increase with an amount of 202,000. Guys, do you see this? It was 151,500 and it's now 353,500. Therefore, when you look at paragraph 96, we have now completed the first bullet point. The fair value of the consideration received, we don't know this, but we do know that we have our 255,000. Therefore, if we now include the 255,000, and guys, look at this and ensure that you understand this. This is a credit. When you look at the statement of changes in equity, no, sorry guys, when you look at the statement of financial position, you will identify that this is a credit. If our NCI increase, our NCI will be credited. Therefore, a debit consideration received to the value of 457,000. Right, guys, do you see this? Okay, now this is our partial disposal amount, 19,1. This is my calculation reference, and I need to transfer this to the face of my cash flow statement. Remember, we need to include this in the cash flows from our financing activities, and this is calculation 19.1, and they've received an amount of 457,000. Right, guys, now when we look at NALA, we have performed all of the important details in terms of our cash flow, and we are now able to tick off NALA and move on to our property, plant and equipment. They indicate to us the total depreciation for the year amounted to 565,800. Therefore, we are able to identify that we need to take this out because this is non-cash, and we need to include this in our T account. In calculation 2, cash paid to suppliers, if we need to take this out, we need to add this back. And we need to add back an amount of 565,800. And guys, in our T account, if we need to reconcile our T account, we need to include the depreciation on the credit side. Remember, our carrying amount will decrease. 5,800. Right? Let's refer back to the scenario. Next section of the sentence. Total carrying amount of property, plant, and equipment sold amounted to 436,500. The profit on disposal for these assets amounted to 5,6,800. Therefore, we know the carrying amount. We need to take this out. 436,500. Now let's just first take this out. Therefore, this is our PPE sold. And what is important to note, guys, in our non-cash items, we need to take out the profit portion. Now, they've provided us with a profit portion. If we need to take this out, we need to include our brackets. And this is an amount of 56,800. But what do we need to remember? On the face of our cash flow statement, remember proceeds from the disposal of PPE. Now, you are not allowed to use abbreviations, guys. Please write this out. Proceeds from disposal of your PPE. And we need to add the carrying amount, which is the 436,500 plus the profit portion, 5,6,800. This is a positive. They've received this. This is proceeds. This is 493,300. Right. Now we are able to move on to the